got Ranga standing by for us in New Delhi to wrap up the day's action for us. Now, Ranga, spectacular gains to end midweek trading. Indian shares up over 350 points today. So lots of buying off of those lower inflation numbers, huh?
Very correct. In fact, Michael, it's been a wonderful day at Dalal Street. The Sensex moving up by more than 350 points and the Nifty crossing that psychological barrier of 5,500. But a word of caution here, you can't endlessly move northwards. If you see in this particular year, the markets have moved up by more than 17-18% in a short span of 1.5 months. So that's clearly not sustainable. So you can expect some kind of correction, consolidation and profit booking in the near future. But the best thing is that, we have moved above the 200-day moving average. And as you said, sector-specific action, all the interest rate sensitive sectors did wonderfully well today, automobiles, banking. And another sector which did exceedingly well was the power utilities sector, and that was on the news that the government of India has given a directive to Coal India Limited to sign a 20-year fuel supply guarantee with all these power utilities. So on that news, Adani Power, Tata Power, Reliance Power and JSW Power, they all moved up between 6 and 14%. So that's really handsome. And also other infrastructure companies like JP Associates moving up by close to 13% and Lawson and Tubro having a handsome 6% move. But from here on, it's going to be the next big triggers. That's the budget and the monetary policy of the Reserve Bank of India. Michael.
Right, Ranga. So great to today, but caution ahead. All right, let's switch gears a bit, Ranga, and talk about some pretty big privatization news. Now, the Indian government today is saying it plans to sell its stake in 2 firms. So does it look like the country will be able to achieve its divestment target this fiscal year?
No way, no way. In fact, Government of India had set a target of 40,000 crore rupees for financial year 11 and 12. So the year is almost to a close now. And just a paltry 1,100 crores could be summed up. But you can't blame the government for that. The market conditions were so bad that IPOs which hit the market did very badly. And many of them had to withdraw, had to defer and postpone. And some of them had to be even truncated midway. So it was very prudent on the part of the government not to enter the markets at this particular juncture with IPOs and FPOs. So that's very clear. And the target cannot be achieved this year. But having said that, the government has also decided to go ahead and divest 5% each in ONGC, which is a mammoth company from the oil and gas sector, and also an equally big company from the power equipment manufacturing sector is BHEL, that's Bharat Heavy Electrical Limited.
Ranga,
so they plan to go ahead and divest.
All right, Ranga, thanks for that.